Hi all, this is Ashish Kyal here from Wave Strategy Advisors. Welcome again to the Elliott Wave News channel, weekly news that we talk about equity markets, about global markets at 4. And this time as well, in over past few days, Nifty has continued to move in a very narrow range. On the upside, 8990 has been a very strong hurdle which price have managed to has failed to break out, and on the downside, we can clearly see that the levels of 8870, has been providing very strong support. So it has been quite some time that we are seeing a movement within this range, and it has been a contracting over past few days as well. So the overall structure looks like some kind of a triangle pattern under formation. And what is more important is, despite the exit polls that came out yesterday evening, Nifty did not react much in the morning when it opened. It opened with a gap up opening. However, later in the day, most of the time price just moved within a range. As soon as it reached towards the lower end of the range, which was somewhere around 8,900, there was again some buying emerging, and finally price managed to close around 8935, 8936. So this range bound action becomes frustrating for a trader if he's awaiting a breakout, and especially if you are an option trader and an option buyer. Sideways action results into deterioration of volatility as well as time value, so which reduces the prices of an option. During this scenario, a very important observation is that on the upside, 9,000 marks a very important level in terms of open interest that we are seeing currently. So that's the highest open interest call has, which means that crossing 9,000 is going to be a task. Second important observation is that despite the exit polls suggesting BJP is going to win in UP, still markets are probably not in a mood to give a strong positive breakout. So if by any chance there is some kind of a topsy-turvy, if something otherwise happens, then there is going to be some serious correction which we might see. Over past few months, whenever there has been a correction or whenever there has been a movement on back of the event, we have also observed that price tend to give a spike low or a spike high and then resumes back to the level where it was. So in a nutshell, we can expect now the volatility to start increasing. A breakout is due for sure, because it has been some time and markets cannot move in a range perpetually. So a breakout is due. And once that happens, we are going to see some very strong trending move in that specific direction. Now let me go explain you about time cycles. The today's topic is going to be discussing something on time cycles, and what are time cycles and how do we combine those time cycles along with neo wave analysis, which is advanced Elliott wave. So time cycle is a very different concept. It is an independent study which helps us to understand whether the markets are nearing a maturity in the up move, or it's probably going to bottom out soon. And for Indian equity markets, we have seen these cycles working amazingly well most of the occasions. The challenging part is that there are times when the cycle does not work. So it just vanishes without providing any kind of prior information. And so those kind of, it becomes very challenging at times. So it has to be combined with the price forecasting technique, which is neo wave, and cycles has to be used as a complementary indicator. So if we get some confirmation from cycles, okay, the market should be probably in the topping mode, and if price is also confirmed, then that's brilliant. Okay, it doesn't happen very often, but when it happens, it gives a very high conviction trade setup. Let me share across my screen on which we have shared across a report. We publish a research report, Financial Wave Short-Term Update, every day to the clients. And I'll share across a report which was published just a few days back explaining about this cycle analysis. So let me just share that across. If you can see this, over here on the chart, we have shown the wave counts as well as 55 days time cycles. So this cycle is of 55 days is derived using Hurst time cycles method, which I'll not be able to discuss in detail. But if you can look at this, every 54 days we have seen some kind of a low being formed. So over here where A is marked, there was a 54-day low. There was a 54-day low again at this point. Again, this marked near around 54-day low. Again, the demonetization that happened just near that, there was a 54-day low. Nevertheless, the up move was very short, but still it was very sharp in terms of price. And then again, we had a 54-day low here. So whenever we are having a 54-day low, it's provides a very vital signal that this is not the zone to go short. Probably we should look out for buying opportunities. So similarly, this 54-day week low is now going to 54 or 55 days. So we have to keep tweaking it based on what is working well. So 54 days used to work very well previously, and now it has shifted to some extent to 55 days. And April is going to be an important area where we should find out buying opportunities, probably by mid of April maybe. And these cycles normally top out in the second half, so which means that probably after the 30 days are gone, we will start seeing some kind of a topping behavior or distribution. It is not necessary, because cycles are tricky, as I said, but nevertheless it provides some kind of an indication. So over here you can see that we are now again in the zone of 30. So 30 days are passed. So we are again probably going to be seeing not a very strong up move. So every time you see after 30 days markets move sideways, again there was sideways action. Over here there was a selling pressure. Again over here it was little tricky, because we saw some up move rather than the sideways action. And currently we are again approaching that 30 days zone. So we are approaching an important juncture at that point of time. If we combine this knowledge of cycle and understanding that okay, we might be maturing in the uptrend, and we start applying neo wave analysis. So in this report we have shown neo wave plot. This is plotted as per the neo wave, which is an advanced Elliott wave, which I am going to talk about and cover in our upcoming training on 18th and 19th March. Very detailed analysis using what is neo wave and time cycles. Over here, if we do the neo wave plot and do the markings, you can clearly see how prices have behaved, and as per that we are probably in the third standard correction right now, and third standard correction on the upside. So this pattern I'll not be able to explain in very much in depth, but in this report you can get very in-depth analysis on which patterns are these: WX, Y, X, and now probably we are in Z. And you can also see this downward upward sloping channel, which was protected for so long, is broken. So this report was published on 9th of March morning. We are already somewhere in this zone right now. So over here, let me now also share across one more chart, which is explaining the 30 days topping time cycle. So 30 days time cycle is not as per Hurst analysis, it is as per observation. So let me share across that 30-day time cycle. How does it look like? So if you can see this screen, this is a daily Nifty chart, and on this chart you can see that every 30 days there is some kind of a topping formation which has been happening over past few months or probably more than a year. So a top was formed here, again a top was formed here, few days later a top was formed. In terms of cycles, you need to give leeway. Again a top was formed in this zone, a top is formed again on 1st of March. So far index has not managed to take out the high of 1st of March, which is around 8992. So going by that logic, we have seen tops which have been formed on those days, and this topping cycle does not mean markets are not going to move higher. This topping cycle means at least few days of correction. So over here, like in wave X, there was few days of correction which lasted for around 5 to 6 days. Similarly, after the top was formed, we have around 5 days of correction already. So this provides a very vital information for a trader. If you know that for 5 days or 6 days markets are not going to take out the high, you have one very valid information. Secondly, if you have Hurst time cycles and you know prices are going to form bottom in April, so you know that before April there is going to be some kind of a distribution or topping formation. Thirdly, if you apply neo wave logic, and by going by the neo wave logic, you will be able to see that how prices are going to behave, what is the maturity of the trend, and how they are going to behave from here on. So when you are combining all of these techniques together, when you are combining the topping cycle, when you are combining Hurst time cycles, and when you are combining neo wave, it gives a very, very high conviction trade setups. But this does not happen very often. It's probably once in 3 months or 2 months or 5 months you are going to see everything coming out in sync and then producing the desired outcome. Still, there are times when market takes you probably off the track at times, and that is where the most interesting part is. You need to then keep analyzing what's going to happen in future. So when we combine all these techniques, we come to a conclusion that probably this is the market where if there is an uptrend and if it continues, prices crosses 9,000 mark, then it can still drift higher, but we shouldn't be expecting very strong trend on the upside unless a new bull trend has started. So, and the participation has to be across. Over past few days also, the advanced decline line has been deteriorating, so there is some kind of a breadth deterioration already in the place. Some kind of momentum which has been we are seeing is not building up. So we are at a very important juncture. Despite of all this effect, if price crosses 9,000, then yes, the rally might extend further. But if it doesn't do that, then we are probably going to see some kind of a medium-term reversal. So we are going to see some huge movements over next week, and it's going to be interesting. Keep a watch on the key levels which have been mentioned in the report. Keep a watch on the studies that I have talked about, and you will be thrilled to see how fantastically it works. At times it works amazingly well. So I hope this helped to some extent about understanding what is a 54 or 55 days time cycle, what is a 30-day stopping time cycle, what is the new wave pattern that we are looking at right now. So if you have any queries, any doubts, or you want any specific details, please feel free to write to us at helpdesk@wavestrategy.com. And also we are conducting a training on 18th, 19th March, which is just a week away now. And this training is going to place some very interesting insights into how all of these techniques can be combined together, how we can use Elliott wave, neo wave, along with time cycles, different methods combined together with basic technical analysis like bar technique, RSI method, and ROC, and how these indicators can be used along with on a basic chart. So these techniques are going to be covered in the 2-day session over the period of 16 hours. And after that, also, if you have any queries or doubts, I'll be more than happy to address them. So that's it from my end, and see you again next week, same time, and have a wonderful weekend. Thank you.